Grant, you have unknowingly led me perfectly to my next question, and this is the
What
investable
can I say?
outcome. But this isn't. But this isn't the investable outcome for people with grey hairs. I cover mine. I want to talk about this younger generation coming through, the Gen Zs, and maybe the younger millennials. And the reason why is we're looking at one of the most tech savvy generations coming through, starting to invest in certain wealthy countries. Some of them are outpriced of traditional ways to wealth, which is the property market. Now, you said earlier in today's conversation that we're looking at not so much the slow decline of the US dollar, but the questioning of its role of dominance in the global economy, and how there is a big shift happening. And we throw on to that a banking crisis that we don't really know what the outcome of that is yet. But yet we're looking at a tech savvy generation that's basically been trained by crypto to embrace volatility. Now, you could think by that hardwiring that, when that's their first what would you say, first experience with the markets, that they're more likely to wade into volatile markets. But this is a different market setup. As you said, there's no buy the dip mentality here. Ushering in those younger people who are obviously bringing in much smaller dollar values to the market, how do you start to set them up? How do you teach them to invest at what is a precarious time to start investing?
But the best advice I can give you is talk to your parents. If your parents have been invested in markets, talk to them. Ask them what happened in '08. Ask them how the world changed for them in 2008. What happened after '08 that they were doing before 2008 that didn't work anymore? What was it about 2008 that hurt them? Where did they find out that they'd gotten their positioning wrong? Where were they too far over their skis? I've said this to my kids, and I've said this to so many people over the years. There are things you can learn. Sorry, there are things you can be taught, but there are some things you just have to learn. And unfortunately, particularly given the markets we've had, where this rising tide has lifted all boats, the lesson of the market actually carrying you out in a box, unfortunately, is something most of us have to learn. Because if you'd have listened to, say, old scrubs like me warning you about what can go wrong over the last 10 years, you'd be scratching your head going, this guy's an absolute idiot. You don't know what he's talking about. The market doesn't go down. You can't lose 50% of him. I mean, it's just ridiculous. The Fed always comes in, the markets rally, just buy the dip. And every time you've done that and you've been ultimately proved right, it's just reinforced that belief. And so, the same way you can tell your kids not to touch the hot stove 100 times, but if they touch it once, they'll never do it again. That's unfortunately the way markets work. I can sit here and tell you, perfect example, a friend of mine had a young intern working for him who'd made a fortune in crypto when it was up at 64,000 or whatever it was right at the peak. And he said, I've made so much money. And he'd made millions, this guy. And my friend said to him, look, sell some of your Bitcoin and buy your house. Just pay your house off. So you've got no debt, you've got a mortgage, you've got a house. And that way, God forbid you're wrong, and God forbid Bitcoin struggles and goes down or whatever happens, and you've got leverage and all this stuff. So you didn't have to go far for him to get wiped out. At least then, no matter what happens, you own your house free and clear. You'll always have a roof over your head, blah, blah, blah. And of course, the kid's view was, are you crazy? Why would I sell Bitcoin to buy a house when my Bitcoin is going to be worth $1 million each? I could buy 5 houses for 1 Bitcoin instead of buying my house now for 10 Bitcoin or whatever it is. And we know what happens next. And that lesson was learned an incredibly hard way, as was the lesson of all the people who, God bless them, had money in Luna and were just thinking, well, I can make a 20% return risk-free here and keep that money. And this is fantastic. We know how that story ended. And I'm willing to believe and bet that most of those people won't get sucked in again to something like that. But the people who haven't been through that pain will probably wait until they go through something similar before they learn. And that's, as I've said to my kids all the way through their lives, I wish I could spare you every kind of pain that you're going to go through. And I can warn you about certain decisions you're making. And I can tell you not to do this, not to do that. And I understand, and it doesn't frustrate me that you're going to ignore me and do that anyway. But just please promise me that you'll learn your lessons. Just if you only make every mistake once, you're ahead of everybody. And that is really the big lesson here is you're going to make mistakes. Try and recognize that things are very different now. And so when dips happen, it's not the same, because that dip could turn into a cascade, and that dip may not go screaming back up above your entry price again, and averaging down is a bad idea all of a sudden. Just understand that things have changed. Try and talk to people who've been around and have experienced different market conditions to the last 10, 15 years, because they've been really the same conditions for the last, for most, or not most, but a significant portion of people's entire investing lifespans, we've had the same conditions. And do your best to listen and take in what they say and act on it without being acted upon by the markets. I mean, that's really the best advice I can give people, in the full knowledge that the vast majority of them will listen and won't actually do it until it happens to them. And that's a painful lesson. But when those lessons come, don't take any more pain than you have to. If things get really bad and you get shaken out of positions, it's okay. It's okay to cut a position and say, I was wrong. And that's absolutely fine. It doesn't matter, right? As long as you're not too wrong, and you're not wrong for too long, and it costs you, your entire portfolio value, it's okay. You can lick your wounds and come again with some knowledge that will stand you in really good stead the next time you see similar conditions.
One of the most powerful lessons I learned early on in my investing career was, if you're going to be wrong, it's better to be wrong quick.
Yeah,
and then learn your lessons from that.
Yeah, and again, I know this is one of the kind of amplifications of this social media related dogma, is that it's even harder now to be wrong and admit it, because generally people have been very public about their opinions. Oh, this is going to that price, and this is going here, and that's going there. And they're very public about it. And so instead of 5 of your mates down the pub, you're telling them, Bitcoin's going to 100,000, and then it goes from 64 to 13 or whatever it is, and you walk in the pub with your tail between your legs, and your mate says, "Oh, come on, mate, have a drink." You've now got 100,000 people chirping in your ear going, "Hey, weren't you the guy that said it was going to 100,000? We're at 13. What are you doing?" And that's a tough thing for a lot of people to deal with, right? So dogmatism and hubris and ego and narcissism and all these things that are really encouraged by the world we live in are the absolute nemesis of being a successful investor in the next 5 to 10 years. So somehow you've got to get those things in check.